Seeing that the market is down, what happened with the big movers like EABL, Safaricom? Did they not help the bourse today?
No, I think it's just a normal market day today. As we've been seeing for the last couple of days when the markets have been positive, I think most of these corporate, some of the investors, some of the pension schemes who are trying to build up some positions before the end of the year are still strategizing for that. So probably give it a day or so, we are going to see the market activity back again.
Well, let's talk about the inflation figures. The rates came down from 17% to 6.6%, and the CBK is now forcing banks to lower lending rates from over 18% to single digits. So how is this affecting businesses going forward?
That's been a very, very interesting discussion. The change of the inflation calculation from arithmetic to geometric has changed those numbers. And if you look at for the last 6 months, central bank has been pushing the banks to lower down their rates. They even went as far as cutting down the CRR as well as the bank rate. But still that didn't push the banks from lowering the base lending rates. We know the MPC is coming up, and there's a strong feeling that they may try to push that agenda of lowering the interest rates by cutting again those key benchmarks. But in terms of business, we are yet to see the real impact because this thing happened last month. And I think in this particular quarter, as people adjust their forecasts, adjust their business plans, probably you're going to see a bit of a reflection from the next quarter going forward.
Fred, what are you expecting out of the MPC meeting?
I think, the market is a bit liquid. The overnight has been doing between 2.2% to just about 3.3% for the last 6 months, you can say. So there's a reason really probably to be able to change that CBR from 7.75 probably to maybe 7.5, which is not very much. And probably also to go for the CRR, which I doubt if they can touch it. But I mean, the government has been raising a lot of cash, and this particular month they're trying to raise about 18.5 billion through the second infrastructure bond. And we are headed towards the end of the year. So most banks, most institutional investors will want to be liquid enough for the end of the year. So for them to be able to get 18 billion without having to affect the interest rates, they may have to do something, probably cut the interest rates downwards.
Well, we know that the holiday season is coming up, end of the year. Take us through how you expect the bourse to close.
Most likely, the NSC is going to continue maintaining at that 100. But I'm expecting towards the end of the month, probably to have stuck at that 100. But as we come toward the first week and second week of December, the real impact of the festive season comes in, and retailers start, getting out of the market, trying to sell, raising some cash for the festives. And again, for most corporates, fund managers, insurance companies, there's always not much activity from the second week going forward to the end of the year. So we are expecting that index probably to come back to 3,000 and even slightly lower than 3,000 as we cross the 31st December, and then probably pick up from the second week of January.
We're expecting many expats to come back to Kenya over this holiday season. Are you expecting remittances to go up?
Yeah, no doubt. I mean, for every year, there's so much remittances coming through, particularly towards that month of December, all the way until January. So probably the figures which were shown by central bank, which had come down by just about 20% year on year comparing this year to last year, may be able to improve probably towards the end of the year, towards December. So some remittances coming through. And some of the destinations like the stock market, like the property market, probably are going to benefit from that kind of activity.
Let's take a look at the cement sector. We know East African cement manufacturers have survived an attempt to phase out import duty after Uganda proposed to have them removed to boost their construction sector. How exactly is this going to affect the cement industry in Kenya?
Look, I was for the idea actually the duty should be removed because we are trying to build the infrastructure all across the region. And I think the suggestion by the Ugandans to remove the import duty was a key thing. That will have probably reduced the prices per cement for a bag of cement from 800 to about 700 or 600. That will have been very, very positive. But I think the Minister of Finance in Kenya was able to listen to the cement manufacturers in Kenya, and they have rejected that proposal. So which means the prices will still keep being above $10 per bag, and therefore going forward, probably the major beneficiary in this particular thing is going to be the government, because they're getting their duty through, and probably the cement companies, because they can be able to keep their prices up. But I think in terms of the general economy, consumption of cement, as well as the GDP expansion, is going to be very limited. It should have been very, very good if that duty was cut off.
Let's hone it down to Bamburi Cement and Portland Cement. How exactly are these companies going to be affected?
I think they're going to be affected positively. Obviously, the prices are not going to come down. The kind of demand is not going to change because the duty has not been changed. I think for those two companies, they're going to benefit more. If you look at the regional market, because Uganda is one of them, but Southern Sudan is there, Rwanda, Burundi are there, as well as Tanzania. So I think those two companies are likely to increase their market share, probably increase production, and also increase their turnovers. So it's going to be a positive thing for them to keep doing the same thing they've been doing.